Good morning, everybody. Thanks for taking time to join our webinar today. My name is Mark Sapsid. I'm the Senior Business Development Manager for Paycheck. And for those who don't know us, Paycheck are one of the leading traditional fully managed payroll service providers in the UK, providing a truly outsourced payroll solution for SMEs. As we're fast approaching the festive season, it's an opportune time to review your current payroll provision in time for the new tax year and also explore ways in which we can help retain your staff in this current cost of living crisis by providing additional support and benefits. With that in mind, we're delighted to welcome Hannah and Andy from our partners, Mattioli, who will be sharing their insight on secrets of an engaging benefits package. As Hannah and Andy present to us, please feel free to add any questions in the Q&A section, which you'll see on the right-hand side of your screen, and we'll cover as many offers as we can at the end. There'll also be a little poll at the end, which we'll ask you to take part in to give us some feedback about what you'd like to see from us next. So, Hannah, over to you.
Thank you, Mark, and welcome to our webinar. After a sizable break, where has this year gone? This is indeed the fourth in a series of our short webinars where we'll be exploring the secrets of a great benefit package. In the earlier webinars in the series, we looked at themes which are important to employees in their early, mid and late career. If you missed these and would like a copy, please do pop a request in the chat and we can forward you the links after. In this session, we will look at how a well-structured employee benefit package can help improve engagement and deliver savings for both an employer and an employee perspective. Since our sessions in Q1 this year, we hope you found that the spiralling recruitment costs are now starting to stabilise a little. And hopefully, having found some new good recruits, potentially buying them in at a premium, it's time to focus on the engagement strategy and really how efficient spends into 2024 can help ensure you keep hold of them and keep them supported and motivated. Whilst employee benefits form an important part of a reward policy, we need to make sure that they are and continue to be relevant for your workers. As Mark said, your speakers today are myself, Hannah Dolding, and Andy Dickinson from Mattioli. We're both senior employee benefit consultants, and we've got over 40 years joint experience in our roles. Please don't ask our ages. We both help provide support to employers in terms of defining strong employee benefit strategies, from considerations around voluntary, online, and engagement options through to the more traditional pension and wellbeing benefits. For those of you who don't know us, Mattioli are a national employee benefit and wealth management firm, and we've got over 900 staff now across the UK. So during this session, we'll be referring to our client case studies and real experiences. It's broadly intended to add colour to the secrets we'll share with you about the great benefit package. Our discussion will probably take about 30 minutes, and then we'll open up to questions. Please feel free to pop any questions as we go through in the chat. And all of these will be anonymous, so you can ask anything you like, and we will try and answer them. If there are any aspects which you would like further clarity on, please also pop a note in the chat, and we'll contact you separately to help after the session. So we are often asked, what is new? What should we be thinking about next? And where do we sit in line with our peers? So these are three really common questions we get from our clients. And perhaps the last question is the easiest for us to cover. And that's because when looking over your shoulder at other companies, most organisations in your sector or geographical location have similar issues in terms of lack of time to spend strategizing about benefits and budgets that are certainly not limitless. So benchmarking existing arrangements is a great starting point, and we can easily help you understand and ascertain comparisons such as, do we need to pay for dependents' healthcare, or should we be increasing our pension contributions to keep us in line? Or even what do other companies provide in terms of maternity or paternity or paid time off? Should we introduce things like holiday buy or holiday sell? So whilst looking over your shoulder and benchmarking is a great starting point, it sometimes can be a distraction from establishing what is relevant for you now. And really what interventions can be realistically put in place to have the greatest impacts and the greatest return for our money with a finite budget. So Andy, you've received these searching questions a number of times as well. What tips can you share in relation to trends?
Yes, thanks very much, Hannah. So there are several different perspectives you need to think about when considering your employee benefit provision. Some of those considerations will be driven by what your employees want or what they think they want, and some will be driven by, sorry, I do apologise, and some will be driven by what your business needs. So employees may have expectations which might be formed by provision with previous employers, by their own views, what's important to them. And these expectations can vary significantly across the different demographics within your workforce. Some employees' perspectives may be formed from their own experience, whether good or bad, directly or indirectly, of particular benefits or particular providers. I'm sure we've all met someone at some point in our careers who doesn't trust pensions, often based on anecdotal evidence, perhaps told to them by their dad in the pub. There are several reasons that employers provide benefits, and some of those are easily defined. So they are an effective tool in both recruitment and retention of staff, particularly in competitive and or specialist sectors. The ability to get staff back to work sooner when suffering illness or injury. And in the case of pensions, well, because the law says so. But in our experience, there are softer reasons as well. And very often, the employer feels they have a genuine duty of care to their employees, and they want to provide them with benefits that will support them. So as you can see, there are a lot of different views and perspectives, but how do you navigate those? And how do you develop a benefit strategy that meets your needs, is valued by your employees, and also works effectively? Crucially, engagement with employees is important here, and in both directions. So employee surveys, and focus groups can help establish what is really important to your workforce. But again, you need to allow for different demographics, because obviously different people within your organisation at different age profiles will have different priorities. But this can help highlight what works amongst any existing provision, what employees want, what they don't currently have, and trends around areas where additional support might be needed. However, it also needs to be clear that any changes to the benefit provision must also be the right ones for the business, and that not every benefit on an employee's wish list will be either practical or affordable. Whilst employees may have their own views on what is and isn't important to them, they don't necessarily see the broader picture around areas where additional support is needed. For example, we all know that as a population, we're not saving enough for retirement. This can impact on a business in a number of ways. So succession planning, people working longer because they can't potentially afford to retire. There's financial and mental well-being concerns. Worries about finances are one of the major causes of mental well-being issues, and these can impact on people's physical health as well as their productivity at work. Choosing to prioritise enhancing employer pension contributions over the improvement of other benefits may not necessarily be seen as a priority by some employees, and particularly those in the earlier stages of their careers. However, long-term, this may be of more value, particularly when coupled with the use of salary exchange, which can also make their employee contributions more cost-effective. And it goes without saying, but employer pension contributions are also cost-effective and tax-efficient. Please remember that in an ideal world, people should be contributing more, far more than the legal minimum requirements for auto-enrolment, and any help you can provide as an employer is essential. Or you may have established that there's a particular issue that's prevalent in your workforce that impacts on their well-being and potential absence rates. Providing a benefit that can support with this might not be immediately obvious to your employees, but might be part of the solution in managing the issue. As an example, I've recently worked with a client in the online video gaming industry. Some of their employees acted as moderators on online forums, were sometimes exposed to harmful and upsetting material. So together with my team, we were able to propose a solution that would give more support to those employees, as well as learning material for the wider workforce to help them understand some of the challenges that their colleagues were facing. Now, this wouldn't have necessarily been something that all employees were aware needed addressing. Additionally, if your workforce is disengaged, providing details of how the benefits work, any added value services, and how to maximise them can lead to a greater understanding and appreciation of how they work, improving the value of that valuable spend on them. Finally, benchmarking exercises help to understand what your peers and competitors may be offering and where any potential shortfall might be a key part of putting together your benefits strategy. So once we've established all the different perspectives and considerations that need to be taken into account when reviewing your benefits package, how can this actually work in practice? Just to give you another example, I recently worked with a growing company in the bio-life science sector. At the start of the project in mid-2022, there were around 50 employees. It's now risen to circa 80. So the company had a workplace pension scheme in place and a group life assurance scheme. However, these were very basic in terms of the pension contribution structure and the benefit provided by the group life assurance. They were aware and concerned that employees weren't particularly satisfied with the scope of the benefits on offer, and they'd also had feedback from candidates who turned down offers to join them due to the lack of benefits on offer. And this was one of the key factors in their decisions not to join the organisation. Given the specialist nature of their business, the competition for employees with the required skill set, they recognised that reviewing the benefit package was key to their continued growth plans. Now, they just wanted to launch some benefits. They didn't necessarily know what they wanted or needed, or indeed what would work. But given the importance, they'd also been told by the board that there was ample budget to resolve these issues. So how do we go about things? Well, the initial stage was discovery. So the employer engaged with Mattioli Woods to help assess what was needed. The priorities were to support the recruitment and retention aims, with the people team particularly keen to ensure that they provided benefits that both helped the employees feel valued and supported them. Whilst they'd had indirect feedback, they decided to carry out a formal survey with their employees, which they then followed up with specific focus groups to help dive into the details of the survey responses further. Thankfully, there were a lot of open questions in this exercise, and the purpose wasn't just to get a view of particular benefits that employees felt they were lacking, but also to understand what their concerns were, if there were specific issues that worried them, as ways of ascertaining what benefits might be helpful in supporting those employee concerns. At the same time as this, we provided some benchmarking and shortfall analysis to help the employer understand where the current provision measured against their peers and competitors, where there were gaps that needed to be filled. And this information was very much data-driven. It highlighted a shortfall in life assurance benefit, a low level of pension contributions, and of particular concern was a lack of health and wellbeing benefits and health and wellbeing strategy. As well as highlighting the specific benefits that they felt that were missing, the employee survey and focus group showed that employees also wanted support in understanding the benefits, how they worked, when they would be used. Additionally, they also wanted the opportunity to discuss their questions and have access to information when it was needed in their own time. We facilitated the decision-making process by supporting the client in prioritising the outcomes of the discovery process, and they particularly bought into the concept of the 3 pillars of well-being, so physical, mental, and financial health. And they used this as a framework to base their decisions on. They were, to be fair, also in a favourable situation, in that the budget for the project was generous enough that the decisions could be made that little bit more easily. Finally, with decisions made, we entered the deployment phase. A suite of new health and wellbeing benefits, enhancement to the existing life assurance scheme, an increase in the base level of employer pension contribution, with potential further increase tied to the employees increasing their own contributions. So some buy-in from the employees. Additionally, the adoption of salary exchange, otherwise known as salary sacrifice, as the default method of deduction from pay. However, just as important as the benefits themselves was the communication, the engagement plan, which wrapped around them. So there were a series of employee sessions. We named these benefit appreciation sessions, outlining how each of those benefits worked, in what circumstances they might be used, and the added value support that came with some of them. The implementation of a benefits platform put all of the information about benefits in one place, allowing the employees to make their selections simply and quickly, and allowing them to be better informed. So where are we? Well, the employer is still taking regular feedback from employees and has already reported that the solutions and support put in place are helping them to achieve those key objectives of improving their recruitment and retention strategy. We've also agreed to check in with the employer, so at intervals of no less than an annual basis, so we can discuss the MI, the usage, the strategy, and plan the communication calendar for the forthcoming 12 months. So, as we move forward into 2024, Hannah, if you can share some of the hot topics in relation to the benefit provision, what do we need to keep an eye on, and where we can make changes that will contribute to easier operation of benefit strategies.
Thanks, Andy. I guess in general, our workers are operating with different levels of worry at any point in time. Some are worried about their kids, they're worried about elderly parents, others their finances. Some are worried about their health and/or career, job, and all of these things. So whilst the cost of living situation is beginning to improve a little, this is still a major concern for many. And with the high energy prices still being stubborn really in coming down, it is still impacting heavily on month-to-month bills for a lot of people. So anything which can help appease, relieve, or stabilise one or all of these aspects within a benefit package will speak to the employees. There are currently still some main reasons and main areas where employees may look for support on an ongoing basis. So some employers have been able to put in place full health and medical packages for employees. Now, well-structured and well-communicated private healthcare package can address a number of these issues, but do beware the impact of the ongoing industrial action in the NHS, the backlog of COVID issues, the ever-increasing mental health issues have all had a massive inflationary impact on the cost of providing private healthcare benefit. On average, we're suggesting to our clients to allow and expect for between 12 to 16% increases due to medical inflation and age increases alone, where the schemes are based on age. And that doesn't take into account any specific claims increase as well, so do be warned. If you can afford to put this benefit package in place or have it already, private healthcare remains the most requested, most useful and popular benefit, certainly for your mid to late careers employees. Also be aware of the opt-in rather than the opt-out healthcare schemes, where employers allow employees to opt into the benefit rather than allowing an opt-out basis. An opt-in arrangement can create spiralling costs and situations where the scheme is in a toxic situation going forward. Healthy employees opt out as they do not want to suffer the P11D or the taxable benefit in kind increases, leaving you with generally older, less healthy people and an unhelpful insurer. To avoid this situation, either bite the bullet and put everybody in, allow people to opt out, that's fine. Or use features such as a moratorium or increasing the excess or limit the outpatient to control future costs. It isn't a great message when you have to put in these restrictions, but employees will understand the pressures when fully explained about the impact on premiums. It's better to have something than nothing in this context, certainly if you've already provided it. Other health and wellbeing benefits are on the upward trend, and these include health cash plans, which have proven extremely useful. This is a way of rewarding healthy employees and helping their funds go further for health and wellbeing benefits, or giving them budgets towards the cost of scans, investigations where they do not have private healthcare or where they're being let down by their local NHS service. In September 23, the Financial Conduct Authority, their value measures data, which looks at claims for products such as health cash plans, and claims frequency has increased to 202%, and that's looking back at 2022. That increase was from 117% in previous year. And the average claim payout has also increased. So we're looking at a significant increase in utilisation of the health cash plan benefits. It demonstrates employees are wanting to engage and they're needing to find extra support in terms of getting money towards the cost of health and wellbeing benefits. And they generally do really value this type of arrangement. We do suggest budgeting for the increase, again, like with private healthcare, but also really getting into the features and benefits of the plans that are available. Some providers offer fully tailored health cash plan arrangements, which with feedback from employees can either help mitigate cost or help drive the budget discussions when you come round to those. Certainly with well-engaged benefits and with health cash plans, they are relatively low-cost products compared with traditional private healthcare. And with a very broad range of features and benefits to support both healthy and not so healthy individuals. So very, very much broader demographic that this will appeal to. In recent benchmarking research, the average employer pension contributions are increasing year on year. So your peers are potentially looking to increase their pension contributions. For professional organisation, minimum average employer contributions now sit at around 5.5%, and that's according to one great survey, the Alan Jones survey. Whilst pensions are never recognised as hot and exciting, this is certainly an area which should be leveraged with your employees and budgeted for if you are falling behind the benchmark. Now, with hybrid working really now the norm for a lot of employers, misconceptions about benefits can spread easily. So employees may be more trusting of their peers rather than you as the employer when it comes to the benefits which are in place and how they can interact with them. Very easily, a good benefit package can be undermined by a few vocal people who have experienced an issue and misconstrued their personal experience to the detriment of others. So do keep an eye out for these in 2024. Recent examples we've seen including where there was a change in healthcare provider, it was needed to improve features and benefits within a plan, but a particular director felt frustrated by a change in their account and getting used to a new app. And they made lots of very unhelpful comments, such as, I think the new provider is awful. I sort of plagiarized slightly there. They used other words. Don't shrug these kind of comments back, certainly with disruptive employees, and getting to the root cause with the vocal individual and then getting training out successfully to address any understanding limitations will really help embed the change and prevent a toxic culture or view from spreading. One also to watch out for in particular is underperforming providers. Now, employees really do trust you as the employer to put in place benefits which suit their needs. There are a number of benefit providers, particularly in the healthcare and pension space, who are suffering from ongoing staff turnover, and it is having an impact on claims or customer service. With healthcare costs rising, if you are still running P11Ds rather than real-time payrolling of benefits, please do get in touch with your payroll provider or accountant, or do come and speak to our partners at Paycheck. Nobody likes a heavy tax bill after the end of a tax year. Real-time tax reporting is an essential way to mitigate the protests about having to pay some tax. Andy, now back to you. What are your thoughts on trends into 2024?
Yeah, thanks again, Hannah. So I suppose in particular, we're seeing trends developing across the physical, mental, financial health spectrum. So these will obviously influence benefit provision, in our view, more significantly than they have done historically. So in terms of physical health, we're seeing an increase in the prevalence of, for example, standalone dental plans, even if it's just as a voluntary benefit. The threshold for introducing a voluntary dental scheme can now be as little as 50 employees. Added to this, more employers are looking to offer employees access to health assessments, again, either employee or employee funded. And you can look to target specific sectors of your workforce in terms of those health assessments, and it's something that we see commonly across our client bank. For very large employers, we're now beginning to see healthcare providers offer access to support around gender health issues. We'd expect to see this filter down in some form to the SME schemes in the near future. And then we're seeing services being offered to assist caregivers, such as support for elder care and access to emergency childcare. So we're seeing a much more paternal view from many of our employers, particularly if we think about that in relation to their views perhaps 3 to 5 years ago. Where mental health well-being is concerned, technology certainly continues to evolve. It gives easier and quicker access to support at the point of need. This can be seen with continued enhancements to app-based solutions, particularly linked to health cash plans, to group risk schemes, and to standalone EAPs, employee assistance programs. At Mattioli Woods, we also have our own mental wellbeing platform. It's designed to help employees formalise a consistent approach to their mental health, support policies, and provide employees with access to a very wide range of resources, learning materials, and practical help. We'd be more than happy to have a chat with you at another point to explain exactly what that entails. And then finally, provision of good financial education and guidance. It's still key. It's a key tool to help your employees make sense of their financial concerns, to help them plan, and to give them all the relevant information to make those informed decisions. Many of the main workplace pension providers do offer tools, so through their online portals and apps, that will help employees not just in relation to their retirement planning, but also their wider financial position. The pension providers have got much better at this over the years. The majority of their material comes at no cost. So again, if it's engagement you're looking for, financial education, there are a range of different tools available to us. Whatever your budget requirements, there are simple low-cost solutions, such as good risk benefits, right the way through to compulsory pension provision, and the ever-increasingly popular healthcare. So, as you may have noticed, technology has an ever-increasing role to play in the delivery of a good benefits package. We have solutions available that can help in getting all your benefit information online, so your employees can easily access their benefits, all the way through to enabling your employees to actually make their benefit decisions, to select benefits online, and all of this obviously streamlines your internal administration. So in all cases, online benefits would enable you to broaden the scope of your offering through the introduction of further voluntary choices.
Thank you. There's some strong ideas, Andy. So you may or may not be aware that there were some new regulations which came into force this year under the term consumer duty. Within this duty, firms, as in insurers, must act to deliver good outcomes for their consumers. And as part of this, they will need to enable and support consumers to pursue their financial objectives. Now, what does all this mean for your employees? Well, any product and service that you have in place, for example, general insurance such as health cash plans or dental, and the majority of employee benefits are subject to these rules. Product providers have been developing a huge number of different value-add services this year. Some of these have been unique, relevant, and are free, such as the care concierge service from one group risk insurer, This looks to help employees with navigating the complex elder parent care world. There's also the state benefits calculator recently launched by a pension provider, which is helping employees understand if they can claim entitlements, which will help their money go further. There have been innovative add-ons to a group life product, including funeral concierge, which helps employees navigate the process of funeral planning. So not just providing the all-important bereavement and probate support when people are suffering with a death, dealing with a death. Slightly esoteric for some. One group risk provider has launched the Tooth Fairy for their group protection clients, but maybe not so esoteric if you live in an area where it's impossible to find a private dentist, let alone an NHS one. Tooth Fairy makes a whole lot of sense if you're in that situation. So every person on this call will have in place at least one employee benefit because the pension aspect is compulsory. So going into 2024, make sure you all know all the features and benefits offered by your suppliers, as well as what future developments they may be adding to the existing offering. Understand this first before going out to market for new stuff. Find the gaps and the desirables from your employee perspective. So in terms of what they need, but what they don't know they need. Make sure that all the cost-saving tools are in place or offered. If you're lucky enough to offer a broad range of benefits, we can certainly help you decide which of these add-ons may be best to promote, especially where there are duplications, such as online GP. And then how to add that into a communication calendar. Innovation is rare in our business, but we are in a purple period of innovation by insurers, particularly driven by regulatory pressure, such as auto-enrolment and now consumer duty. Now, I will hand you back to Mark now at our partners in Paycheck.
Thank you, Anna. Really insightful. Thank you both. So yeah, now over to some questions. We've had a couple come in. So one is a request actually. Could we have the links, please? Yes, no problem at all. We will be sending out the links in due course. And if you register for this, they'll be emailed directly out to you. Also, do follow us on LinkedIn for any new notifications of any more webinars coming up. This will be our last one for this year, but we're keen to get them going again in the early new year. And question probably one for you, Hannah. What savings can an employer make in relation to benefits?
Well, there's obviously broking aspects, so making sure that you are paying the right value. So undertaking market reviews, especially in the private healthcare sector, where it is incredibly competitive and those premiums are spiraling, certainly for a lot of people. But in terms of savings, some of the best ways are using the salary exchange benefit. So pension, if you haven't got salary exchange in place, that should be really in place for all staff. There's an aspect regarding consultation and changing contracts to put that in automatically. But if you haven't done so, then you're not benefiting from national insurance savings. There's also other benefits that you can salary exchange, such as cycle to work. And also, if you've got any historic childcare voucher schemes, they're also tax efficient. A slightly unusual one, which you may not have heard of, is providing employees with the ability to fund up to £500 per year towards pension advice. So that again is a valid salary exchange where both the employer and employee benefit from tax and national insurance savings. And there's also green car aspects, so electric vehicle purchase schemes. You do typically have to be a slightly larger employer to make sure that those arrangements work for you and for your workforce. But again, there are certainly tax efficiencies there too. So yes, salary exchange, brilliant. We bang on it about it all the time, but it's a great way to save costs, both from an employee and an employer perspective. To launch salary exchange schemes, that's where we would suggest you do put in place a good financial well-being webinar or one-to-one surgeries, that kind of thing, so that people fully understand it. There can be a lot of misconceptions still about salary exchange and how it works. And that's one of the areas that if you launch it and you get one of these vocal people with their views that aren't quite right, nip it in the bud and do, you know, get to the root cause, but make sure there's a good education piece there too.
Excellent, thank you. Another question come in. How do you advise that employees are notified about annual increases in premiums for a GCI scheme or a healthcare cash plan, for example, with the cost increasing significantly?
Yeah, it will very much depend on the size, the demographic of your workforce. Obviously, smaller employers are very much in touch with their employees, but if you've got a very large workforce, perhaps out on the road all the time, yeah, this is certainly an area that does need to be communication to alert them of these tax changes. As I said before, ideally, these benefits should be payrolled rather than having a lumpy P11D at the end of the tax year. But yeah, you do need to communicate with them about changes that will affect their tax ongoing. So, Andy, any thoughts from your perspective?
Not really. I mean, often it's a good problem to have, actually. Certainly with the health cash plan, you know, when the premiums are increasing, the P11Ds are increasing, it will generally be down to the amount of activity and the MI and the number of claims on that plan. So I think Hannah's absolutely right. Communication is absolutely key. If I was sort of giving that message, I think if somebody were potentially complaining about the P11D, which is only very small in the health cash plan, I'd be encouraging them to use it for dental, for optical, for sports massages, physio, whatever it may be. It's down to us individually to make the most of these benefits. I think that really ties in with the communication piece.
Brilliant, thank you. And on the subject, P11D's got another question coming, which actually I can answer this one. It's how easy is it to register for real time? Because currently using P11Ds, that's a real headache. It is relatively easy, actually. The only thing to remember is you do need to register before the start of the tax year. So if you wanted to do it for next year, get onto HMRC now, because we know how busy you are with come January and leading up to end of year. So it's something you're looking to do, then certainly look at it now. And as mentioned previously, if you're not using Paycheck already, we have lots of our clients now doing this. They're finding it a lot easier. So please do reach out to us if you've got an inquiry, want to benchmark the service. I'm more than happy to go through that with you. So that's it for the questions. Just one more late question here, and I did cover it earlier on, but somebody apologised for being late. Will there be a recording and slides? Yes, we will be sending out a recording of this. So if you've registered, you will be getting an email directly from us in due course. And now finally then, it's just if we'd like to launch the poll, just to get some feedback from you about what you'd like to see next. So we have got what can catch employers out through employee benefits when going through mergers, acquisitions? B, how can you benefit program assist employees with the cost of living crisis? Or C, how can a good benefit package offer support your high achievers? See if you can all stick a vote in there, please, just so we can get some feedback from you. And we'll work hard on those, and like I say, present that out to you early in the new year. So I think that's it from me. Thank you very much for all joining. We'll give you the rest of your day back, and I'm sure you're all keen to jump on and find out what the autumn budget has to offer now. So yes, I shall leave you all to it. Have a good rest of the day and the week, and thank you all very much for joining. Take care.
Thank
Bye.
you.